Well, hello. Thanks for joining us today. We have a new law is out, and the final law has been announced. The beneficial ownership information. This is from our friends at the Financial Crimes Enforcement Network. They issue a final rule, 99 pages long, about this brand new form. What I am referring to as the FBAR for small businesses. Now, unfortunately, Keith Redmond is here with us. Keith, why don't you tell us in layman terms what the FBAR is? What is the FBAR in your mind?
Well, the FR is a foreign bank account reporting. So that means that anyone who is a U.S. citizen and is a signatory on whether it be a personal account or a professional account that's outside the United States needs to file an FBAR each year, provided that that account or the aggregate of accounts that you're a signatory on is 10,000 US dollars or above. So from an American overseas perspective, that means that American overseas needs to file an FBAR on his or her local bank account where they live to the Financial Crimes Enforcement Network. And technically, and I underscore technically, if they don't, they have the possibility of being socked with a penalty. Now, a lot of people don't file the FBARs overseas, so I don't know how that goes, but that's what it is in a nutshell.
So it sounds so the FBAR is a criminal form. So would it be
Right.
fair to say that if you own a foreign bank account, there's a presumption of criminality that you can only cure by filing in a report, and if you don't, your life can be turned upside down. Is that about right?
Yeah, that's about right. That's about
All right.
right. But
So, do
yeah.
you know of any person who ever asked for the FBAR? Is there any political party demanding that the FBAR rule, the way it is,
Well,
be?
this is where I am a little bit, I don't want to say confused, but just unsure. I mean, the FBAR has been on the books since the early 1970s,
Hmm,
and the amount has not changed since that point. But
no.
it's only been in the past number of years where it has come to the forefront. And I have a feeling it has to do with FATCA being implemented.
Hmm,
After that, there's been a focus on you need to report your foreign bank account, regard
right.
any bank account that's outside the United States, I should say.
Now, one of our issues, right? One of our issues is that we're trying to get people aware of this massive injustice and overburden, law that just punishes people. The problem we have is that it only generally affects people with income or assets overseas. And so most Americans, most homeland Americans, what's their concern level about the FBAR?
Well, I mean, what's their concern level? I mean, if you're a homeland American and let's say you have a bank account in France because you live there or for whatever reason,
Hmm.
um, you need to report it. And I shouldn't say just a homeland American. You can be a permanent resident in the United States, a green card holder or whatever. You need to report that bank account. Um, that's what you do. And that aspect is not so unusual as compared to some other countries. I know in France, for example, you do need to report your bank account that's outside of France. Now, are the penalties that severe like the United States? No, they are
No.
not. But the part that I have a hard time with are people that have to report their local bank accounts where they live.
Yeah.
And that even includes that if you happen to be on a joint checking account with your non-American spouse, technically that needs to be reported. But then you get into the issue of what if that non-American spouse doesn't want you to do that? But that's a whole nother bowl of wax.
All right.
So
So Keith, what could you as you watch and listen today and participate, the thing I'm gonna circle back with you is sort of what you expect will happen to American businesses now applying extrapolating your FBAR experience to this. Pay attention to this crazy new law that's passed, now administered by the same FBAR people or partially administered FinCEN. With
mhm.
that, I'm going to turn it over to John Richardson. John was kind enough to create some slides this morning for us. And this is the corporate, comes from the Corporate Transparency Act. And look, this is a brand new thing here. So we're all kind of learning a little bit about this together. So John, good morning to you, my friend. Thank you for the slides. Want to get into it before we express any outrage, or do you think? I mean, wow. Why don't we just get into it here so we can kind of go along? So the Corporate Transparency Act. Here we go. This is something from the Obama administration. This is so this is where it came from. So this is a memorandum. So John, what's this right here from the Obama?
No, it actually doesn't come from the Obama administration. I mean, just starting off, okay, so let's kind of get to the bottom line, explain what this is, before we start messing it up with details here and there, right? So
Yeah.
the general mantra directive for individual Americans, and it's particularly visible when it comes to Americans abroad, is report early, report often, report everything, and by God, keep a record of what you report. And this is manifested in a number of information returns, which FBAR is one, Form 8938 is another. I think Americans abroad are generally subject to potentially something like 40 different forms. But the basic theme of these things is that, the government clearly wants to keep an eye on every aspect of your life. Okay, there's no question about it. And we have automatic information exchange through FATCA, et cetera, stuff they get automatically. But you must appreciate that things like FBAR 8938 and all these other things are additional measures to force individuals to become transparent to government. Okay, this is the theme, that individuals must be transparent to government. Now, I'm not saying this is only the United States, but as we know, the United States tends to take a lead role in everything, including, I think, this issue of individuals having to be transparent to government. Now, this particular thing, I mean, it's pretty obvious, okay, that, fundamental principle of democracy is that government should be transparent to individuals.
Right.
Government's got to be transparent to individuals. We, of course, have less and less of that going on. And so here we have, for example, this article from 2019 Seattle Times. Let's continue on now, recognizing this is a problem, right?
Yeah.
Next slide. Anybody who's seen the Snowden movie and that, I think the most memorable quote was, well, I used to work for the government, but now I work for the public. Okay, I mean, the whole point there again was the massive surveillance regime. Okay, I mean, these are things that are outside automatic information exchange and, forced reporting. Continuing on here with this. And honestly, the 1984 is, I wouldn't say it's the best book I've ever read, but it's probably my all-time favorite book. And I read the book at, many different stages in my life. And, I've seen it entirely differently, starting with when I was a teenager, great story. Then I began to see other things in it. But I mean, if we think in terms of from Orwell's 84 to America's 2024, and I note that on January 1st, 2024, the Corporate Transparency Act, okay, make yourself visible to government, visible takes effect. And so this is an extension of the requirement of being visible to government, extending it from the individual, to this whole idea of entities, of any kind at all, any kind of business entity. I mean, the bottom line, and here's what it's becoming, right? Coming soon, January 1st, 2024, it's going to be report early. Now, this means that within 30 days, of forming any entity within the United States, you better report. Report often. Well, as always, there are certain exemptions to this. One, of course, is if you have more than 20 employees and more than 5 million in revenues. Apparently, you're exempted from this. I don't quite understand.
Wait a second, but the law says Corporate Transparency Act. Why didn't they? It's funny they didn't name it the Small Business Transparency Act. They kind of wanted to.
Well, remember, this is Orwellian. All
Hmm.
animals are equal, but some
Hmm.
are more equal than others, right?
There you go. Right on.
Explains it, doesn't it? But here's the thing, right? I mean, somebody might have the 20 employees and the 5 million and be exempt, but what happens? What happens if they go to 19 employees? Or what
Right.
happens if they have a bad year?
What happens?
The changes must be reported. So
The
report
changes.
often. Okay, report often. So just think about this. Anybody who sets up small business corporation, an LLC, any damn thing, this is incredible, has 30 days to report this to FinCEN, financial crimes. It's,
Crimes.
there's no, it's a
Crimes.
presumption of criminality. But the best is yet to come. Look at this, Anthony.
All right. Oh boy.
No, no, back.
Back. Oh yeah, this part. Yeah, yeah.
Report. Now, what do you report? Here's the key. Everyone. Everyone associated with the including, by the way, Anthony, the lawyers and accountants.
Whoa. Hey there.
Be
Well, you
careful.
know what? That actually might get some attention because lawyers don't like to do anything.
No, it's not going to get some attention. Now, let's talk about this a little bit. One of the fascinating things about lawyers is the extent to which they play an important role in implementing immoral or amoral government
Yes.
policy.
Yes.
Okay, I mean,
I would extend
really
that as well and I would extend that as well to tax accountants.
Oh,
Since
absolutely,
it's
absolutely,
all
especially
that without them, if it wasn't for lawyers and CPAs, and really CPAs for the most part, the tax code couldn't be the way it is. There's no way it couldn't be because no one could figure it out. So you're absolutely right.
well, Anthony, I really believe. I mean, this may be an exaggeration, but having thought about this on and off over the years, I believe that the propensity of lawyers to facilitate compliance with the law, as opposed to opposing unjust and illegal laws, is actually primarily responsible for many of the massive injustices that have been carried out in the world, right? I mean, lawyers are in a unique position that they presumably can understand this stuff, some of them anyway, presumably can see this stuff coming. But rather than, talking about, injustices, et cetera, what do? They write articles about how to comply. I mean, you know,
Yeah, right.
oh,
Here's
but
not how to fight it. Here's how you're all gonna do it because you better, right? Not any analysis onto any of the problems with this whatsoever. Every law that's passed is a good thing because, and I mean, one of the big groups on compliance is big money, right? And you don't have to go to court. It's not so messy. So
well,
hey,
it's partly that, no question, but I think it's also a mindset, right? Of the people who do this kind of work. But it's fascinating. I put this together this morning. Well, maybe not obviously, but I put this together this morning. And the first thing I did was I just did a Google search, Corporate Transparency Act. So all of a sudden, about 300 articles show up written by law firms.
oh right, yeah.
It's not truly incredible, about how
Right.
to comply with this. Anyway, continuing on here. So it's Orwellian.
Yeah, Orwellian beyond, right? So here it is, our administrative policy. And this is
Okay.
ooh,
And it's deeply, this is a message from the Trump administration. They're lauding this, commends the bipartisan work undertaken to develop HR 1253. By the way, the lead legislator was none other than Representative Maloney. Remember Carolyn Maloney?
I do remember Carolyn Maloney from the FATCA hearing we were
Yeah,
at in
Representative
2017.
Maloney, Democrat in New York. She took the leadership role in this, right? Okay.
Oh, amazing. For bipartisanship. Oh, that's fantastic. Yes.
Well, I mean, that's the one thing they all agree on. Okay, is making life tough for everybody else. Anyway, so the Trump administration is in support of this. Continuing on,
Oh boy.
right there, a message from the president. Now, what does the damn thing mean? So hat tip to dlapiper.com, this law firm that, or maybe they just had the good luck or bad luck of being the first one I looked at today. But I would have to say that that's a reasonable Reader's Digest version of what's going on. So let's look at this. Effective January 1st, 2000, and virtually every legal entity incorporated, organized, or registered to do business in a state must disclose information relating to its owners, officers, and controlling persons with the Financial Crimes Enforcement pursuant to the newly enacted Corporate Transparency Act. Then it goes on to say, I mean, that's big stuff, right? It
Yeah.
goes on to say it receives bipartisan, it aims to reduce terrorist financing, money laundering, and other illicit. Oh, God.
Of course it would. Of course it would.
Sweeping law is likely to open Pandora's box for private
Mm.
funds, family, and angel that historically prefer. I think this is interesting, and of course, there's all about the penalties. We have both criminal
Oh.
and civil penalties. Anyway, continuing on. How cool is that?
Oh, wow. So we got, wow, this is, bipartisan. There you go. That's when you know to hang on to your wallet, right?
Now, as you know, I'm always a fan of, as much as I appreciate the article from the people at Piper Law Firm, which I thought was very good. I think one always needs to go to the law and see what's happening. So this is HR 2513. Now, notably, Anthony, we've talked about Mr. FBAR, etc. And we know that's part of the Bank Secrecy Act. Notably, this is a straight addition to the Bank Secrecy Act.
Yeah.
Okay, continuing on.
That's right. Somehow your small business is now a bank, I guess, right?
Absolutely.
Hey, right on.
Now, just to show you where you find this structurally in Title 31, we've talked about 5314 many times,
Oh,
Anthony.
so many times. So many times. Yeah.
Penalties, civil and criminal. But now, this is the new thing that they've done. Okay. They can't really do anything for individual Americans, but by God, they can do this other stuff. So now this is Section 5336 of Title 31. Here it is, beneficial ownership information reporting. Now, and there's a link to it. The point I want to make is where this is found, okay, how this works structurally. I would also like to add, though, that lest I give the impression this is a truly American invention, it is not. America actually lags in this. Europe has had beneficial ownership registries for some time. In other words, collectively, first world democracies are working hard to make sure that while government is not transparent to people, people are absolutely transparent to government. Okay, so
Mhm.
going on. Hence the link to Mr. FBAR, right?
Mm.
Okay. Next. Well, yeah, I mean, this is it's exactly like FBAR, because remember that, in the FBAR statute, it's punted over to Treasury.
Mm.
They do the same thing here, although they do provide more structure in the statute about what's required, but it's the same basic principle that they throw it over to Treasury and say, here, Treasury, you can, make regulations, for, and so here we go again, right? Here we go again.
Here we go again. Yeah, well, and I do have I have a link to the final rule in the description of this video. It's 99 pages long. The final rule, 99 pages long of very small print in 3 columns. So that's the government's version of simplification, I suppose. That's just the final rule. And there's always more to go from that.
Well, Anthony, the reason for that is to make sure nobody can understand it. Okay. I mean, you have to understand.
Yeah.
I really come to see with this stuff. All right. How can I put it? In fact, this should be another podcast we do. The penalty, the purpose is the penalty, and the penalty is the purpose, right? I mean, that's, I think, the overriding consideration here, because this is, of course, going to, bring all kinds of people into the penalty net who had no idea that such a thing could even exist.
Yeah.
Continuing on.
Right on. Let's see here.
Okay. Now, the point I'm trying to make here is that the FBAR regulation is 1010.350. I didn't see something in there today, but this is where you would find the regulations. Okay. It's the same sort of thing. Continuing on.
And
Well,
yes, we have a manual.
Absolutely. Okay.
And I do have this, and I have this link as well in the description as well. So this is the manual. And Yeah, like
It's only
I was
35 or 36 pages.
it's only 35 pages long, and it's a remarkable because the pages don't line up with the page numbers. Because I was looking for something, but don't pay attention, so they couldn't really line up the page numbers correctly. But
Isn't that a
small
nice
problems.
logo, too? Don't you like the logo?
It's
I really love their
they
logo. I mean,
they put their top talent on it for sure, right?
well,
Um,
here's the thing about it, right? It makes it seem like it would be fun to enter, right? So you enter through the B, looks
the
like
world,
Y,
right?
you enter through the globe. Welcome to
And it's green and blue. So what could be wrong? It's in green and blue. So there, it's nice and powerful and relaxed. That's the green and blue combination for you. Excellent design work there.
cool stuff. Okay, continuing on. There's the link for anybody who wants to find the reporting manual. Continuing
Yep.
on.
And by the way, the reports aren't out yet. They're not going to be out till the beginning of the year or soon, therefore. So this is where we're getting to be so the meat's about who is to be reported. Um, and this is the one thing that the way that I looked at this is like if it's something that you filed with a secretary of state, it's going to be filed. That's really the trigger. If it's anything that's filed with the Secretary of State, a Secretary of State, whether it's Nevada, doesn't matter where, that is something that you would have to report to the government.
Yeah. I would also point out that it applies to foreign entities doing business in the United States. Yeah, I mean, this is
And that's and so now you got to love it. So they have to report. So you for a while they've had to report things under FBAR and FATCA, and now everywhere they have to go, they have to do that. And here's a comment from Johnny Utah. The American sanctions have collapsed over the world. FATCA is another form of Sanka. I've been in Swiss banking for 20 years and are abandoning FATCA as we speak. And yeah, the Sun has said here, well, this sort of seems to be another, this report seems to be another form of a sanction. Hey, you dared own a small business? Well, we're going to, because it creates this affirmative act that if you don't cure, well, now there's a sanction. So it's an obligation that creates a requirement. If you don't get it right, you will be sanctioned. So that seems about right to me. Hey, our friend John Allen. Hey, John Allen. Thank you, John. We were all on his podcast. He uploaded that yesterday. Thank you, John. Thanks for watching today. Really, we had a lot of fun. So, John, we have something new coming here. Oh boy, this is a crazy new law that we're going through. It's going to affect anyone with any person overseas with an entity in the U.S. and it's going to affect any U.S. business owner in the U.S. So it's pretty crazy what we're dealing with here.
Yeah, Anthony, before we go to the next slide, I'd like to add the following because I don't, I mean, this stuff's not the easiest to understand, but everybody understands, when it's individuals who are required to report early, report often. So it is true. I mean, there's a separation in law mostly between an individual and a legal entity, right? Like a corporation or a trust. So some people, they look at a requirement that applies to them and they say, well, why don't I create a corporation or a trust or some kind of separate entity to get out from under the requirement, right? Which could, for example, include, that's why sometimes, I mean, at least according to the U.S. government, why somebody might create a foreign trust or a foreign corporation, this sort of stuff. So, in other words, what this is doing is requiring people to report their relationship to a separate entity, right? That's really what it is. Now, and this applies domestically. Now, I would point out in the Internal Revenue Code, we have foreign trust reporting requirements, Form 3520. We have controlled foreign corporation, Form 5471. And this is a way to extend this more generally to everybody, right?
To everybody. I mean,
everybody and everything.
Everybody. It's so it was difficult to digest. It's one of these things. When I read it for the first time, I said, this can't be. And I remember it was on my radar, Corporate Transparency Act. I'm like, oh, that's a little crazy. That's
Well,
not the rule's not going to be so crazy, but oh, it is, and it's so overwhelming. It's actually hard to digest this to see what it really is. And I would say for me, it's really understanding the FBAR gives me the proper context on how to look at this, and to know where it's going to go, and to know what they're up to, and to know how they're going to use this. That there will be two, hey, look, if you're a large business, don't worry, you're exempt. You're exempt. Don't worry about it. You're fine. You're fine. Yeah, you're a small business. Well, now we need to know everything about you.
well, I
including
think
this
one should probably view this in its base terms as expanding FBAR to the world.
That's a great point to look at it. That's exactly expanding FBAR to the world, and not just anything about a bank account. Just because we want to know where you are, in case you do something wrong, we know what to grab. We know what to freeze you out of. That's what it's about. You don't need this information for really legitimate reasons. You need it because you intend to control people down the road. I think that's the fear of mine, and I think that fear is well justified as we see the government work in collusion with private actors to sanction people it just doesn't like. Well, this is just mind blowing.
Well, again, let's go back to one of the other slides from Orwell's 1984 to don't actually go back there, but from Orwell's 1984 to America's 2024, right? I mean, what this is an attempt to do is take the final piece, if you will, right, to ensure that the people are totally transparent to government in every way, right?
Every way.
Yeah.
Every way. So if somebody wants to, and and as we know that there's very few punishments for data breaches, intentional and negligence in the US government. You could breach data all you want, and you're probably going to be okay unless you're, say, a sailor who inadvertently takes a picture of a nuclear sub. Well, then you're going to get, you're going to be hammered. But if otherwise, this is just it gets a little too much. If you're just joining us, we're talking about the beneficial owner information report. It's a brand new report. It is mind blowing in its application, and it's hard to actually say this. When I say this, it's unbelievable. It applies to every small business in America. Every small business that's registered with the Secretary of State now has an additional form to file. We're not talking about the penalties yet. We'll tease that. I'm sure you have a slide on the penalties, right, John?
The penalty is the purpose, and the purpose.
There you go. Right on. So we'll get to that. So hang on as we get to the penalties. So we're going to move on.
So,
to the next
gentlemen,
slide.
yeah,
go ahead.
Interject for a second.
Yeah.
So this really has nothing to do with foreign bank account reporting now. Does
No, it does not have anything to do with foreign bank account reporting other than this. It's the same entity,
right,
that is creating the form, and it's the same concept. The FBAR creates an affirmative duty on everybody with a foreign bank account, and if you don't disclose that information,
right,
you can be penalized. So it's the same idea. This applies to every a business owned in small business in the U.S. that's registered with the Secretary of State. And you now have a mandatory reporting requirement. And if you don't do it, well, we'll get to the penalties as well. So again, not talking about foreign bank accounts. We're talking about U.S. small businesses. That's why I'm calling it the FBAR small businesses. Does that make sense, Keith?
Well, one last question on this. So it has to do with small businesses, but it's their bank accounts that are in the United States as well, correct?
No, it's actually not bank account reporting. Thank you for that. So the clarification in my analogy, it's only those two elements of the FBAR that I'm applying. It's regulated by FinCEN, or actually the three. It's regulated by FinCEN. It creates an affirmative duty to file, and there's penalties, massive penalties for not filing. So it's those are the three things. It doesn't have anything to do with bank accounts. It just has to do with the complete invasion of privacy. That's
okay. Got it.
The fourth thing there, right?
I think
so.
It's interesting to me. America does not have a tradition of seeing privacy as a value. Okay, now this is
Mm.
probably
That's true.
because the way Europe does, obviously because of atrocities that have happened in Europe. There's I think a realization and understanding of the value of privacy. Um, I don't know that privacy is a good word to use in America in talking about the problem of this type of thing. I think transparency might be a better word. Okay, one thing I find in Canada too. I mean, by that I mean our part of the world, right? That most people generally are of the view they have nothing to hide, so why should they care, right?
Yeah.
Um,
Yeah. Right. Yeah.
but anyway, now let's look at what's actually required to be reported. One of the things that's interesting is legal name, date of birth, uh, address, this sort of stuff. Interestingly, no mention of citizenship or immigration status.
Oh yeah.
Um, Stay tuned. I expect that there may be an amendment to that, or
Yeah.
Treasury may try to get that in somehow or other. But that's
Yeah. Yeah. It's
okay.
massive. Yeah. Now the one thing that I was super excited to have, is like now I'll have a FinCEN identifier. I will
Oh
have to
God, yes, yes.
I will have my financial crimes enforcement network number. And I'll remember that number for I guess everything I own. I guess that's what it's going to be. That each individual will have a number. Maybe I could get that tattooed on my wrist, so I don't forget it.
I think it's very, very reasonable, and it won't be too long before officials in the American government come up with the idea of actually giving every person born in the United States a FinCEN number right at birth.
There you go. Just in case you might have the idea of creating a small business.
Oh,
You know,
exactly.
you might,
You don't have to apply.
yeah. No, by the way, nonprofits are actually exempt from this, by the way. Interesting. Because nonprofits, and so now if you're looking to do something shady, do it in a nonprofit, maybe an NGO. All these non-governmental organizations around the world who we have no idea who really finances them. We don't know where it comes, but they're exempt from filing, so don't worry about it. Our NGO overlords, they will not have to file anything. They'll be exempt, so don't worry about it. It's just the small businesses, a plumber who's looking for a limited liability because he got some advice from a lawyer friend. Say, you might want to have an LLC to protect yourself a little bit. Well, there you go. Now we got him, right? There you go, you little criminal.
Well, I mean,
What?
it's clearly evolved to the point where there seems to be an operating presumption, that people are up to no good in the most basic aspects of their lives. Now, you know, I would expect a reaction to this that people are just going to stop registering businesses. What they'll do is they'll just sort of, hi, yeah, you can pay me. I'm, John, I'm a plumber, and no, I don't register my business, but I can do this. I mean, I don't know what the regulate probably,
Yeah.
but I mean, what it's going to do, all right, it's going to have, I think, almost the opposite effect. See, look, I think one of the big mistakes here is to be running this stuff through something called financial crimes, right? I mean, if they just called it,
They're being honest, though. They're being honest, and the way that we're taxed, we're criminal. So I guess this is
well,
the rare instance of government honesty of
it's
how
gonna
they
be
truly
people
look
don't
at
have to
us.
register. Anyway, there we go. Continuing on.
We'll continue on here, right on.
Yeah,
All right.
there's
Oh well, here we go. Now this is what it's all about, isn't it?
the penalty is the purpose, and the purpose is the penalty.
It is indeed. So let me just do some quick math on this here. I just don't know. 365 times 500. Why am I multiplying those two numbers together? So if you don't file, right? Well, it's sort of weird. Well, which one is it? Reporting violations. One shall be liable to the United States for a civil penalty of not more than $500 for each day the violation continues or has not been remedied. Two, may be fined not more than $10,000, in prison for not more than 2 years, or both. So I'm not sure if the $10,000 is the cap, because every 500, if you do it for a year, that'd be $182,500. So I'm not sure how they're going to interpret this
I agree.
rule.
I'm not sure either. I'm not sure
Uh,
either. But the thing is, I just pulled this out of the legislation. Okay,
yeah.
there is more, and if I'd had more time, I might have gotten into this. But here's the thing. Okay, we know that the penalty is the purpose, and the purpose is the penalty. So we know they're going to be going after people in
Yeah.
some way or another.
Yeah.
We also
And
know
yeah,
that by increasing the penalties can be used as a revenue offset for other kinds of legislation, right?
yeah, and this is the key why the FBAR was, as we say, it's all a trial balloon for what they're going to do here. They got that in, and the Supreme Court never said, "Hey, look, there's a massive problem with the FBAR. You're criminalizing behavior, and you're creating an unreasonable search and seizure. You're doing it through a very clever way. You're forcing people to disclose with or else." But that's still an unreasonable search and seizure. Just because someone complies with your demand doesn't make it an unreasonable search and seizure. They're worried about what you're going to do. Well, the problem for all of us is that we've had years of FBAR litigation by the Supreme Court, and that's the Title 31 significance that we have here. Supreme Court's fine with the FBAR, and they're going to be fine with this because who cares? And that is really the problem of us not paying attention to what is going on. So this is the other issue. The reasonable cause standard is something that's so diluted by the Supreme Court. I mean, the reasonable cause, because this is okay. So you have a business. What happens right now if you own a small business, and let's just say you're in long-term care? You're in long-term care because, well, something's going on, and you lost the ability of your faculties, and now you're heading into long-term care. And yeah, your business has an entity and someone else is running it, or maybe not. Maybe no one's running it. And well, 2024 comes along and you're still in long-term care. And you don't even have the ability, you're in pain, you don't have the ability to do anything. Well, what's the reasonable cause because you were in a coma or unable to do anything? Is there any reasonable cause written into the law? And I don't see it.
I don't know. Maybe there is. Again, I just
It's
pulled
not
it.
there.
I would point out that my interpretation of this is that it's a one-time reporting requirement unless there's a change.
And that's right. It's a
Very,
one-time
very
report.
Because if you went into a coma and you couldn't file an FBAR, presumably Treasury would come after you for a willful FBAR penalty, right?
Correct. That's right. That's right.
Here, yeah, because that's an annual filing requirement, right? Here, it's an initial, I think it's an initial requirement, okay, unless there's some kind of a change, right? And the change, I think, is moving from not having to report to having to report or something of that nature. But anyway, I didn't have time to get into the details of this. I mean, this is just a general kind of discussion. So anyway,
This is our first time. Yeah, you will probably be discussing this a bit more because there's a lot more to discuss.
oh yes,
And this is to be continued. So this is what I'm going to this is a question for Keith. Keith.
Sure.
So Keith, does the Financial Crimes Enforcement Network administer? Is that the entity that's responsible for the assessment of FBAR penalties?
Good question. I don't know if they're the ones that assess the penalties, or does the IRS assess the penalties? I believe it's the IRS. Correct?
That's right. It's right. And here's the reason why. Because the FBAR, which was claimed that it was going to fight international terrorism, okay, again, 1970. Right. For some reason, this valuable tool didn't actually stop it. Okay, all right. So hey, well, we'll just do some more reporting. So this is what happened. That it basically, the only people who are going to file the FBAR are the people who aren't breaking crimes. so all you're getting is all the useless information filed. So what happened was the Financial Crimes Enforcement Network says, who cares about these files? Who cares? Now, I did encounter an ex-Treasury agent who did look at FBARs that were filed when he was investigating crimes. He did say, oh, yeah, every now and then he would look at a couple of them. But for the most part, FinCEN looks at these as a completely useless thing. And by the way, he wasn't in Treasury, but he wasn't in FinCEN. But FinCEN looks at these as like a total waste of their time. So they said, well, you know what? We really don't want to be bothered with these FBAR reports. So why don't we just have the IRS do it? Sure, they're not the Financial Crimes Enforcement Network, and sure, they're the taxing authority, and sure, this is a criminal form. But what would be the hazard in handing off the enforcement of a criminal form to a civil agency? So that's what's occurred, is that the IRS is the entity that's in charge of assessing FBAR penalties. So now the FBARs, there's about 1 million filed each year, and there probably should be about, who knows, 7 million filed a year. But now we have these, and actually I have the numbers. Let me do a screen share, because I actually have the numbers of how many the government expects to file here. Let me get this up here. So here's the burdens of it. So we have the initial reports, okay? So they, for year one, I have this is the final rule, and I have the link here. They're expecting 32 million initial reports, and then updated reports, I guess, during the year of 6.5 million. So we have a situation where, okay, if FinCEN can't handle 1 million FBARs that are filed, Keith, who do you think is going to handle the 32 million beneficial owner information reports? Who do you think will be handling that, Keith?
Good question. I mean, who is going to handle all that amount of work? 32 million.
And I mean, I think there's only one entity that could possibly
do it. Well, it would
right?
have to be the IRS, but
exactly.
Anthony, if I may interject, you said that there's about 1 million FBARs that are filed each year. Is that what you said? Where do you get that information?
Oh, just I remember reading a press release years ago. They were saying that there's about 700 FBARs filed, and it's just been slowly growing. So I'm giving my estimate.
So,
do you have a figure that's different? That's less I think I have.
No. I only question it because I haven't been able to find any information on how many FBARs are filed each year. But if it is indeed 1 million, that means, and from an American overseas perspective, the vast majority of Americans overseas don't file FBARs.
Correct. And that could be because they don't need to, because their account balances are in 10,000. But for the most part, I would say there's a lot of non-filing.
I think it's a lot of non-filing because if they're not in the U.S. tax system, they're not going to be filing an FBAR.
Yeah. This is something. Yeah, this is exactly.
So, and there's really no incentive to do so based on these law after law on top of law after law. Okay.
Well, here's a great comment from John Allen. We were just on his show. He just uploaded that yesterday. We had a great fun on that. John, the government was suspect of my financial life overseas. Absolutely right, because we're creating all these everything's more complicated, everything's tougher, taxation's worse, the penalties are higher. Totally true statement. The government was suspect of my financial life overseas. Now I'll be under suspicion of what I want to do in business back home. John Allen, that's perfectly stated. I mean, there you go. You're not only are you under suspicion. I think we've gone beyond suspicion at this point. Now it's just straight out accusation. You're likely doing something. You're probably doing. You're doing something criminal. But you know what? We'll give you a report so you can just disclose it. So if we want to charge it, we can. So well stated, John. Well stated, John. Thank you so much for that. Now we're seeing the amount. Now these are some of the amounts that they're showing are going to cost. So for this Corporate Transparency Act, which is just it's like people transparency, that's what it would have been more accurately titled, and it's not even really corporation because it applies to LLCs, but they wanted to go with the branding of evil corporations who are actually exempt from it. So I mean, complete, a complete lie in the title of it. So here's where they're going over the costs of this. Okay, and I was actually having trouble looking at this number. So the total cost for the first year, just hold on here, folks, $22.8 billion in compliance costs for both the government and people. $22 billion is what this costs. And our benefit is, we don't know, but it's going to fight terrorism. Apparently, the Bank Secrecy Act, I guess, wasn't so good in that. They said that's absolutely needed, but it didn't do such a great job. So they needed even more to look at us and to expose $22.8 billion, which, by the way, is their estimate. And I could go through and show you, and maybe this would be other subject, another podcast, of where they're totally underestimating the time.
Anthony, imagine, here's the cost, right? I don't know if it's accurate or not. It seems to me to be, my impression is it's high, but regardless, obviously this has to be paid for through penalty assessments. Obviously, right?
And you know what? There's going to be easy penalties to assess. I mean, you have 32 million entities that are going to be suspect. And so, Ian, I mean, what's going to be the compliance rate after year one? Probably not 100%. My guess is you'll have 10, 20,000 entities to go after. Here's the thing too, right? These are incredibly people. If they don't file, how easy is it to penalize them? For most, very few. Nevada, Wyoming, really the only ones. And actually, I'm not sure about Wyoming 100%. But every other one of us, if you want to go to California, who's the owner of this entity? Oh, it's right here. It's public record. If you go to Connecticut, you want to know my entities. It's right there. There I am. There's my address. So it's this thing where you could easily create a program to go through and scrape all of the Secretary of State's information, of which we have, compile that with who filed a BOIE, say, oh, lay it on top. We already have your information, but they don't even need it. But we're going to create this report. Yeah, we have your information. We know you own it, but we need you to file this report that shows you own it. Oh, you didn't do that, so we're going to penalize you. Oh, reasonable cause. Yeah, well, look at how we interpret FBAR reasonable cause. It's really not going to apply so well.
I have an idea for how this could be managed, actually. We were talking a few minutes ago about how, from January 1st, 2024, any person born in the United States gets a FinCEN identification number automatically.
Absolutely.
That's how people should be referenced, with the name as just sometimes known as. So we'll have, so Anthony Perrant Jr. is born, and his birth certificate is simply a FinCEN identifying number. And then there's a line that says, also sometimes known as Anthony Jr. or something like that. But look, here's the thing. I just came up with a great idea. Clearly, when we look at all of this collectively, the only conclusion one can draw is that everybody is presumed to be up to no good and a criminal. That's the
exactly. And especially if you own a business,
why not this, right? Well, business or anything else. So why not simply at birth, presume that people have a lifetime penalty exposure of, say, $100 million.
Okay.
Every time they do something good, they file a form through their life. It gets reduced and reduced and reduced.
Huh.
Right. So, every year you can reduce that by a few $1 million by filing the appropriate forms. And then instead of, America doesn't have a death tax, but upon death, if you haven't gotten your $100 million down to zero or whatever, the U.S. just collects the rest as a soak-up death tax. What do you think about that?
I hope they're not watching this podcast, because
I think that's a great. I think that
they're probably working on that
way
now.
American way.
Well, this is if you want to get into some hilarity too. This here we go. This is something I got to show you guys. It's pretty crazy. So they're just saying, oh, it's not a big deal, guys. It's not a big deal. This form's not a big deal. You're totally on your mind. Hey, look, it's simple. 20 minutes of your time. It's 20 minutes of your time to identify, collect, and review information about beneficial owners. It's going to take you 20 minutes to fill out the report. So your total time burn is 40 minutes, and we're just going to say that your average wait to file is $56.76 an hour. So hey, look, man. Oh, this is their updated report. So your updated report's only $37.84. I'll have to go up. Now that's kind of funny because this final rule itself is 99 pages long. So part of their compliance is not to read the rule. That's not necessarily a requirement. And let me just see if I have the file in the initial report, if they came up with a story for that. Okay, here we go. So this is what they're claiming for. This is the amount of time that they're going to claim that you could review this 99-page report. So they do include it here. They're giving you 40 minutes. They're giving you 40 minutes to read. Now, if you have a complex structure, they're giving you 300 minutes. But how do you know which one you apply to, right? So you don't know that you applied it for the 40-minute one. These people, okay, well, that's going to be 300 minutes, so a day. So a day, basically, in their own admissions, this is going to take you a day just to read the things. Then it's going to take you, that is 4 hours to identify and review if it's a complex structure, which is probably exempt, by the way. So here it's 30 minutes for everybody else. And so here it is. Total time burden they're only claiming is 90 minutes, but in that 90 minutes, they're admitting that you're not going to read everything that's relevant, that could be relevant. So here it is. This is where they get to this absurdity. The cost for report is $85.14. Well, how does someone know they're not going to be assessed penalties? How do they know? They don't know. They are. And by the way, it helps to be an expert on this. If you're already an expert, it might only take you 300 minutes. But if you're brand new to this, or if English isn't your first language, or all this is kind of foreign to you, well, you might not understand it. And by the way, this is a non-delegable duty, like all things, and so you're ultimately responsible for everything that you file. So here, this is where I think I would want. I can't wait to get to some of the comments that people are going to leave here. And here we go. This is boy. Here we go. Johnny, Utah. All roads lead to renunciation.
You're kidding me.
Yeah, I guess it makes sense for a lot of people to say maybe goodbye to the US if you just don't need to be here. And here's another reason: if you could find a better place that values privacy in any sort of substantial way and has a system that isn't out to get you. And maybe some people don't quite understand why we are so upset with this, because, and this is what it is, we see how they assess FBAR penalties. We know how they work. They work to hammer the naive, and this is the naive who are trusting and don't think the government is out to get them. The government is out to get you. Let me tell you, they are out to get you. Here it is, 99 pages of a final rule. They're claiming you don't even need to read to understand in order to fill it out correctly. Now, the other problem that the IRS has is, this is what people don't know, and I could think why we're going to have the IRS administer all of these penalties, is that the IRS has an actually hard time with audits. The IRS doesn't have the staff they do, that they used to have. They don't have those bright, hardworking people that they used to have to do. And by the way, taxation has gotten more complicated. And by the way, they're sort of more limited in who they're able to hire right now. It's just not that attractive to work at the IRS. So the IRS has some real problems with their examinations. So the IRS can really only examine things that are simple. A Schedule C, they can examine. If you're missing an FBAR, they can do that. If you're missing an 8938, they can do that. If you're missing another form, they could do that. They could assess it. That's easy. Hey, this form's required. You didn't file it. Easy penalty. Well, likewise, here it is. Now, every IRS examiner, will go into audits, because really you could just look to see if somebody is registered as Secretary of State, and if they filed a BOIE, they could easily start, oh, this is great. I'm going to start this examination off with at least a $10,000 penalty. Maybe there's a continuation penalty on top of it that could be in the hundreds of thousands of dollars. So before they even look at any unreported taxes, anything, They already know this is going to be a win for them. And that's, Keith, does that make sense to you, what I'm saying? Not sure.
Anthony.
Yeah, go ahead, Keith. Go ahead, John. Sorry.
So I think that where this is probably going, right? I mean, obviously, this is going to be a big job administering it, and I think the government could create, the Department of Penalties or something like that. The Department of Penalties. But the other thing they could do, and I think this makes a lot more sense, right? They've turned over the prison system to private corporations. What about simply subcontracting a private company to go around, snoop around, and assess penalties?
Oh God!
I mean, what about that?
God.
How's that different from a private debt collector, right? And they can,
God.
They can even have an international division where they can send people overseas into other countries.
Oh God, John, you're not. I mean, you're joking, but you're not. Because that is the reality of the situation, that they're creating such a compliance workload. There's no real way they can handle it. Yet they have this penalty bounty. What's the solution, right?
Exactly.
The public-private sector marriage, and this is just like the tax farming.
Anthony,
that's what we have here. We're back to tax farming. For those of you new to the channel, tax farming is something that was in Egypt historically. How the pharaohs raised money is they would sell off the turf of where people were, and wealthy people would say, okay, we're going to take the right to tax these people here. We'll pay you, Pharaoh, this amount of money to tax. So that got the pharaoh out of the dirty, messing business of tax collection, and then the tax farmers that could be free to tax however they wanted to. And if they got a little abusive, then the pharaoh would back off a little bit. But generally, that's what it was. Tax farming was the way, and it's really for good and for evil, from Charles Adams. That's one of our favorite books there, and that's where I've learned about that. So they can go back to penalty farming. And that would be certainly the way to handle this massive, really, the government sort of has sown the seeds for massive, massive penalties, but the government doesn't have necessarily the harvesting equipment to assess these penalties. So how can we solve this?
The harvesters are the lawyers and the accountants.
There we
All
go.
they need to do, you know what they ought to do? So they say, well, we have a newly established Department of Penalties, okay? And we want to download the day-to-day work to the private sector. What they could do is just let the accounting firms and the law firms, they could bid on the contract, right? And basically, whoever gets the contract gets a percentage of the penalties. I mean, it'd be perfect, right? Because, this way the U.S. government, it'd be like a FATCA sanction, right? Okay, where, of downloading the cost of the administration of the foreign banks. They simply download the cost of the private sector that pays them a percentage, right? I mean, they make a certain amount off the penalties. The private accounting firm, one of the big four, undoubtedly, right?
Well, ones the largest ones, the most obnoxious ones who have the
economies of scale.
Well, the ones who lobbied for this law, right?
Exactly.
I mean, this law didn't come out from nowhere. So the ones that lobbied for this law will probably get the contracts to.
I really think that the thing I said earlier is the way this is going to go. Every American is going to be born with sort of a presumptive $100 million of penalty exposure. And as they do something correctly, it just gets reduced and reduced. And then when they die, if they still haven't reduced the thing to zero, they have to pay the excess amount to the government, right?
Yeah.
And
oh my God, this is where we're headed.
And of course, what will happen, Anthony, is that every year, sort of like the Hunger Games, right? Every year, the government will simply pick 25 people who they just want to arbitrarily kill, who still have, a high penalty exposure, right?
There you go. As a warning, as a subtle warning to say you might want to get into compliance. So I'm just, guys, I'm scrolling slowly through, or actually I'll go a little faster because I'll never make it. I got to scroll faster. I'm going to go through the 99 pages right here of the final rule. So if you can see, I'm scrolling through it, and hopefully I finish it we're about done for time today. So hopefully I can finish this by the time we wrap up. But this rule just keeps going. I mean,
Here's the title for
what else is the purpose of this if not to completely?
The penalty is the purpose, and the
Yeah.
purpose is the penalty. And what this should be described as, you say it's 99 pages. Why not title it Around the World in 99 Days?
There we go. Government has something for you. We have something. Wow, this is I ran up I'm getting tired scrolling this. I need to ice my fingers. It's just taking too much energy. So I'll just trust me on that. There's a link to this in the description of the video of the regulations. There's a link to the law, and also the small business compliance guide of the Corporate Transparency Act, of which large corporations are exempted from. Here we go. This is what it is. So, folks, I don't know where to say what's next, coming next, but it's not going to be good. That I do know. So I'm curious as to what the comments are, what people think about this. Okay. All right. Here it is. By the way, awesome comment here. To back up my point earlier, Keith, the figures in the link demonstrate the majority of Americans overseas do not file FBARs. 2018, 1.2 million filed. So here we go. Here's the figures. 1.4 last known figures. Thank you so much for that, Cred 65. Thank you so much. So wow, that's kind of what we're seeing. So there's a big penalty bonanza there the IRS can't get to, so that will be farmed out. FBAR penalties will likely be farmed out. And so
That was me that put that up there.
Oh, that was you. Oh, you're the
was me.
secret. Oh, wow.
I'm the secret guy. I found it.
You're the secret guy, Cred 65.
Yep.
All right. I thought I had a new fan, Keith. You kind of ruined my morning. I got all excited.
I am your fan.
Well, I'm happy to find that out. Thank you so much. I'm a fan of yours as well, Keith. All right. So I think that's all we have time for today. I do want to share information with everybody. If you are thinking about that road leading to renunciation, if you're thinking about that road, I'm going to suggest that you reach out to my friend, John Richardson. He can help you out here. Here's his email, citizensolutions@protonmail.com. Additionally, if you are thinking about how this applies to you and you don't want to speak to a lawyer, such as me or John or accountant, but rather want to speak to someone who's a lay person who will kind of maybe a little bit more flexible on the things you can say. As an attorney, I'm bound by making sure I tell you that compliance is the rule, and I'll tell you the consequences of particular courses of actions. But my job also is to, ensure compliance. So Keith offers a valuable service for people around the world trying to figure out what to do about what their particular situation.
Yeah, help them navigate their particular situation. Yeah.
The navigator of navigators. Here's his email, US_overseas_advocate@outlook.com. Keith, you also have a Facebook group. What's the name of that Facebook group where people can find you?
That is American Expatriates for Residency-Based Taxation.
All right, that's seamless, quick. But that is what we're dealing with, and now who knows what's going to happen with this? But to me, this is a huge final. We're getting to those final nails in the coffin, I think, here for any sense of privacy, liberty, free from government control. They want to know everything about us, for reasons they're not entirely clear about, but I think we all know. So this is Anthony Parent for IRS Medic. I really want to thank everyone for joining us today. This is a new topic, and so it's new to all of us too. I really want to appreciate everyone participating. Love the comments, and hopefully we'll have some more things coming up. And it's really, maybe this is time, and this is the point we've been saying for a very long time. You need to unite. The government has had a massive help because they're able to divide and conquer us so far. We have homeland Americans versus expats, and so we're divided and conquered there. And now FinCEN is hitting the expats really hard. Now this is truly something that should unite all Americans straight against Financial Crimes Enforcement Network and their invasion of our privacy for no legitimate reason, while the big people, here's one thing. They say it's about transparency. Well, you know what? I've read that 99 pages of the proposed regulation. Who's the names of the people who wrote that, right? We're not allowed to question that, but they're allowed to question everything about us. With that, this is Anthony, parent of IRS Medic, and I do want you to tell you to subscribe, and also be sure to turn on those notifications so you are alerted when we go live. That way you can participate, ask questions as we go along. Again, this is Anthony, parent for John Richardson and Keith Redmond. Thanks for watching.